Hey everyone, welcome back to the channel, which is all about income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds to reach financial freedom as soon as possible. Today we're going to talk about the NASDAQ 100 index. So as Canadians, it's important that we diversify a little bit outside of Canada because the Canadian economy is very, very heavy on financials, energy, materials, utilities, doesn't have much technology, healthcare either. That's more on the US market. So it's a great way, or investing in a major index on the American side. There's three of them, right? The Dow, which is a little bit more value oriented, S&P 500, which has a lot of technology, but it's also very diversified. But then the third one is the NASDAQ 100 index. This is out of the three indexes on the American side, the one that's the most tech heavy. It's about 50% technology stocks. So it's a great buying opportunity right now, I feel like, because technology stocks, which are, riskier growth stocks, always come under pressure, come under fire when interest rates are rising rapidly, which is happening right now. So if you're an index investor and you want to get in a little bit on this opportunity to capitalize on technology stocks, but you don't really want to go all in and buy a pure technology ETF, for example, the NASDAQ 100 index is a great way to do it. It's more conservative because it's not full technology exposure and it's a big index. So I know many of you are very, very heavily favor the index style of investing. So today's video, we're going to go over what are two options: a growth option, pure growth option exposure to the NASDAQ 100 index, and a income option as well. This is obviously the income channel, right? So I'm going to give you the income version as well on how to invest in the NASDAQ 100 index. And both these ETFs are going to be listed on the Canadian stock market as well. So it's a great opportunity, a great way for us Canadians to get exposure to that tech-heavy US index. Let's get started. So let's start with the growth option to start off with. What if you just want access to the NASDAQ 100 index? Pure growth style, you don't really need any income right now. Well, HXQ is a phenomenal option by Horizons ETF, and in my opinion, like I'll show you here, the best choice. So there's really three major Canadian listed NASDAQ 100 index ETFs. So let's take a look at HXQ, and then we'll compare it to the BMO version and the iShares NASDAQ one as well to see the differences. So obviously, the goal is to get the total return of the NASDAQ 100 index. Key features: this is a very tax efficient ETF because what makes it different from the next two, or the iShares and BMO one, is that they don't make any distribution. So the NASDAQ 100 index, because it has a lot of technology stocks, a lot of them don't give out dividends. There's not much of a dividend yield on this index. It's about 0.5%. It's less than 1%. So what Horizons do is that they don't even give out the dividends or the distributions. They just reinvest it back into the fund. So if you're holding HXQ in a non-registered account or a TFSA, you wouldn't need to worry about, on the non-registered that is, you wouldn't need to worry about paying taxes on those distributions because it does not give any distribution. So this is a pure growth option, which is very, very convenient here. If we look at the MER, this is an index ETF. So as usual, we're going to expect a fairly low MER. The MER is only 0.28%. And I just want to compare it to the other ones just to show you here. So if you look at ZNQ, which is the BMO NASDAQ 100 ETF, the MER is 0.39. So quite a big difference. Even the iShares one, XQQ, the MER is 0.39 as well. Where do you have it here? Sorry about that. Key facts. Here it is. MER 0.39. So the BMO and the iShares one are obviously competing against each other, but the Horizons one is a lot lower, and this is a great option. It's been around since April 19th of 2016. So this will give you access to the top 100 companies on the NASDAQ, which are not financial companies. So if you just, give a quick idea of the sector mix of the NASDAQ 100 here, obviously you're going to expect a lot of information technology, a lot of technology companies. You can see here 50%, but it doesn't only have technology. This is what I was saying in the intro. It's a great way if you want exposure, heavy technology exposure, but you don't technically want to go all in. You also have communication services, consumer stocks, and even some healthcare as well, a little bit of utility. So it is fairly diversified, but definitely geared towards those technology stocks. And you can see the top 10 holdings. You'll probably recognize all the companies: Apple, Microsoft, Amazon, Nvidia, Tesla. Of course, the bigger the market cap is, this is a market cap weighted index, which means the bigger the company is, the bigger exposure you'll get. So over 20%, if you're investing in the NASDAQ 100 index, over 20% of your investment is going to Apple and Microsoft. So very, well-established, big cap blue chip companies. And, there's other companies as well that are non-technology ones, like Tesla. Here's Nvidia, it's a chip maker. Pepsi, you see here. So, and of course, as you go, there's 100 companies, you see the top 10 here. So really nice sector mix, definitely geared towards technology here. If we go to distributions, there is no distributions on this. This is what makes it different from this one here, ZNQ and ZQQ, which give out a quarterly distribution. But HXQ just keeps everything inside the fund. So it's a pure growth style investment. Let's check out the performance. This was very interesting. So if you look at the 3-year performance, it's 13.57%, gain or annualized performance. That's a total return on average in the last 3 years. And of course, this is as of the end of February. And if we compare it to the BMO one, so remember this number here, 13.57. If we look at the performance, it is higher than the BMO one at 13.43, and the iShares one is only 11.46. So out of the three, HXQ actually has the highest performance. It has the highest total returns. So in my personal opinion, this is a great option. I think it's a great idea what Horizons have done with this. They are reinvesting the distributions, not giving them out. This has probably allowed them, of course, I'm speculating here, to have a much lower management expense ratio. So in my opinion, HXQ is definitely the one of the best options that us Canadians have. This is listed on the Canadian market if you want access to the NASDAQ 100 index in a pure growth form. So what if you want income instead? So obviously this is the passive income investing channel, and Horizons also has what I feel is another great option, or the best income option on the Canadian stock market from the NASDAQ 100 index exposure. It's QQCC. So QQCC is the Horizons NASDAQ 100 covered call ETF. Obviously, you know that I'm a big fan of covered call ETFs. And the first thing that will stand out to you is the enormous yield. Of course, this is always estimated. This is as of end of February of 13.26%. So, like all covered call strategy, they write covered calls on the NASDAQ 100 index, and we'll break it down for you here in a second. So if you look at product facts, first of all, let's look at the MER. It's 0.85% MER here. And the estimated annual yield is absolutely enormous right now. And volatility, don't forget, guys, helps covered call premiums to be much richer. And the Horizons actually has a dynamic, like it says here, a dynamic covered call approach where they will not, write covered calls on the whole portfolio. They do it up to 33% of the portfolio. So you're participating in the growth of the NASDAQ as well. You're monetizing the volatility and getting that monthly income. So if you look at the distributions, the latest distributions here, if you go back to 2022, and one quick note about this ETF, very important that you understand this, guys, is that this ETF, QQCC, used to be named HEJ. It was another ETF that had nothing to do with the NASDAQ. They renamed it in mid-2022. So when you look at the performance, you pretty much can't take into account, because it only became the NASDAQ 100 covered call ETF in mid-2022. So there's really no point in looking at the performance here. But if you look at the distributions, you could actually see a big jump in mid-2022. So went from 3 cents to 4.5, 5 cents, 5 cents, 5 cents. And then starting at the end of 2022, it jumped to 11.5 cents. And it's been, 0.1075, the last three distributions. That's the last one of 2022. If you look at 2023, they've all been very steady at 0.1075. So you can't really expect 0.1075 all the time. Remember, these can change, but it's been the same for the last 3 months. So it's fairly easy to say that you could expect a very high level of distributions, monthly distributions. Right now, it's over 13% yield, which is absolutely incredible. And I like that the distributions are getting more consistent, and they're monthly as well, which is really, really awesome. And if you scroll down, you'll actually get this article here. It just came out a couple of days ago. I'm filming this on March the 15th. And what this article says is that it's basically, QQCC is basically beating the NASDAQ 100 index, right? So the performance of QQCC overall is beating the NASDAQ, is outperforming the NASDAQ 100 index. So that would be, something like an HXQ on a total return basis. And that is because of that covered call income, which the premiums get bigger with volatility. So really, really awesome income oriented option here. If you want access or exposure to the NASDAQ 100, if you're an income investor like myself, this is a very, very similar fund to QYLD. QYLD is by far the biggest, not the biggest, but one of the most popular covered call ETFs from Global X, which is a sister company, by the way, of Horizons. Both Horizons and Global X are under the umbrella of Murray Asset Management. So QYLD is another covered call ETF, but it's on the US market that writes covered calls on the NASDAQ 100 index, but it's a little bit more aggressive. It covers the entire portfolio. They are at the money calls. So you could expect, less growth with QYLD compared to QQCC because they don't write covered calls on the whole portfolio. They also write typically out of the money covered calls. So it's just very, very similar. If you're a Canadian, you really like QYLD or QYLG for that matter, which does calls on half of the calls. Calls on half of the portfolio. Well, QQCC is a very, very good option because it's listed on the Canadian market. It's very, very consistent. If you click on holdings, it's quite simple what QQCC has. It literally holds HXQ. It literally holds the Horizons NASDAQ 100 Index ETF. And then they write, here are the calls. They're writing calls on NDX directly. NDX is simply the NASDAQ 100 Index ETF. Right, so really, really cool. I strongly suggest you consider and look at QQCC. You could read this article here that just came out. Very similar to what QYLG does. Here's QYLG, which is basically, they do it on 50% of the portfolio. And I strongly suggest that you check out the interview I recently did with Nick. So this guy is the actual person at Horizons that's managing QQCC, writing the calls. A very, very interesting conversation. And we, for about 6 minutes straight, we talk about QQCC. So I strongly suggest you check out this Q&A. I love doing these interviews with fund managers. It gives you an opportunity to actually see who are the people managing this fund. And I think Nick is a really, really bright guy. So I'll put the link to this Q&A in the description below. So there you have it, guys. I mean, you have the full growth option of HXQ, which is currently has a lower fee and outperforming the other two major options on the Canadian market, ZNQ, XQQ. We looked at the numbers and numbers don't lie. I suggest you strongly, do your own research and check them out. But you also have a phenomenal income option now, QQCC. Both of these are listed on the Canadian market. So it's a phenomenal way for us Canadians to get access to the NASDAQ 100 index, whether it's growth style or the income style. Hey, don't go yet. I have some important reminders, including some more recent ones, and I'll try to keep it as brief as possible. And for everything that I'm about to discuss, the links and info are in the video description below. So first of all, if you didn't know yet, I do offer a one-on-one coaching session where you'll have a 1-hour Zoom call with me where you could ask me all the questions you want and I'll help you and assist you best I can. Just remember that I am not a licensed or registered financial advisor or planner. So to book a session, go on my website, PassiveIncomeInvesting.ca, and right there on the homepage on the left-hand side, there is a small video. Watch that video to know how to book a one-on-one properly with yours truly. Also on my website, you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once. And this is really a reference tool or a companion tool to help you build your own portfolio according to your needs and your objectives. It has lists of funds. It has sample portfolios for both Canadian investors and American investors. So make sure to check it out on my website. I actually created a video which shows the product from A to Z because I don't want you to spend money unless you know exactly what you're getting. So make sure to check that video out on my website. And don't take my word for how good it is. Check out the reviews. There's over 300 of them and they are all 100% real reviews. So here's some more updated news or recent news. I am now on Blossom, a new investing app designed for investors. I've been using it for a few weeks now. I think it's really, really great. It has a really cool feature where users could actually add and share their portfolios and what they're buying and selling every day. So you could actually link your investing account so it's updated automatically on a daily basis. I recently added my own main portfolio so you could follow how my portfolio is doing live and what I buy every month. Really, really cool. It's like a mix of Facebook and Twitter, but specifically for investing. So get on your phone, click on the link in the video description below and download the app. It's 100% free, so you too could share your portfolio. Just remember to look for me and follow me. My username is Adrian, PII altogether. Also, I do have a referral link for Questrade, so you could get $50 worth of free stock purchases. This is the Canadian discount broker that I use and I recommend. Unlike Wealthsimple, the other popular discount broker in Canada, you could drip everything you want. It has all the stocks and it also has dual currency accounts. Very, very convenient if you're buying both Canadian stocks and American stocks. I have a Questrade video, by the way, which gives you a little tour of the features, so make sure to check that out. I also have a referral link for PASSIV. This is the portfolio tracking tool that I use to consolidate all our accounts to get a nice bird's eye view, so you can consolidate all the information together for easy tracking and stats as well. Also, our Facebook group, Passive Income Investing, is now an invite-only private group. So to join it, you need to click on the link in the video description below and give the group a like to get invited. So we take pride in making this one of the best investing Facebook groups out there with over 13,000 members. There's no scams, there's no spammers, and negative and doomsday people, we kick them out right away. Also, follow us on Instagram if you want a little bit more of our personal journey here in Panama. And lastly, just remember everyone, I am not a licensed or registered financial advisor. This channel is all about my personal investing journey and how I invest to generate high passive income from a diversified portfolio of high yield funds. It's for educational purposes only, so don't forget to do your own research and due diligence. And of course, stay safe everyone, stay healthy, and of course, stay passive. See you next time.